Alright, y'all, I want to talk about 9 simple tips that can take your trading to the next level. Now, I can guarantee that this information is very helpful. Once I understood and internalized this information, it brought me to the level where I could actually become profitable trading and be confident in my ability to be a profitable trader. But I want to say at the beginning of this video that you have to not only listen to this information, but you have to then apply this information. Because without the application of the information, it's not going to help you very much. And I basically want to revisit a video that I made last year because somebody brought it to my attention that it was a really good video and that I should revisit it. So that's exactly what I'm going to do. I want to play an older video. The information still holds true. And I think especially in these bear market times, it can be very helpful for us to kind of review these things, because even in a bear market, if we can become profitable in a bear market and refine our skills in a bear market, then when the bull market comes, it's much easier to take advantage of that without the emotions getting in the way. And yes, it's possible to take trades in a bear market. I mean, for example, Bitcoin bounced right here from about 15.8K. This was one of the levels that we were looking at in the VIP Discord on Friday, where the first level that we were looking for a potential bounce was from this 15.8K level. That is exactly where we did get the bounce from. And, you know, even before that, the naked point of control, right, the long trade from 15,450 was a level that we gave in advance over here.
I'd say that 15.3 to 15.4 is a nice confluence, a naked monthly plus a daily.
You know, that's my point is, it's possible to really refine your skills in a bear market and then take that and apply it in the next bull market, and it will really help you a lot. If you want to join this Discord where we post the levels, we post the trade setups, a great community for educational purposes only, you can go to patreon.com/Jason Casper. Also, one more quick thing before we get into it, guys. ByBit is currently giving me 0% limit order fees for 30 days. So if you are interested, I'm not trying to shill ByBit, but this is legitimately a good deal. If you're interested, sign up using my affiliate link in the description of this video, create a new account, and you will get 0% limit order fees for the next 30 days. Full disclosure, guys, I am an affiliate of ByBit. I do get 0.025% of all market order fees if you sign up under my link, right? So I'm not trying to shill it, but it legitimately is a good deal. All right, guys, with that being said, let's get into this older video, 9 simple rules that you can apply to become a better trader. All right, y'all. Today I want to talk about how to become a successful trader, because the truth is many people want to trade part-time or even full-time as their main living, but we all know at least 90 to 95% of people lose money trading. So today I want to talk about 9 things I think are very important for the success of any trader. These 9 points are things I have gathered over my years of trading, and now I am at the point where I literally do this full time, and I want to share these 9 things with everybody else. So, the 9 trading rules for success. I'm going to go through them one at a time, and I think if you can focus on these 9 things, you will be in a much better place than most other people who are setting out on their trading journey. I know for myself, I went through these things in the wrong order, okay? I went through them in the wrong order. I struggled with each one of these things for many years. It's not until I got all these things locked in that I actually started having success. The first step to having success, the first rule to being successful in this trading game, is you need to take the time to learn technical analysis. For me, when I first started trading, I thought I could cut corners. I thought I didn't need to take the time to study the ins and outs of technical analysis, how to analyze a chart. I thought I could just look at things and I would learn as I went. I thought I could learn by experience because that's the way I do most things in life, and I feel like a lot of people learn very well through experience. Well, let me tell you, if you don't take the time to actually learn technical analysis and you think you're just going to learn by watching a chart and trading, you're quickly going to learn that you have no idea what you're doing. And so it's very important that you take a course to learn technical analysis. Read some books, read some online blogs. I highly recommend taking a course because a course will lay things out for you in a step-by-step, orderly fashion so that you don't learn things out of order and you learn them in order so that you can build upon your previous knowledge sets and skills to continue to become a better trader. I know for me, a lot of things in life, because I didn't take the time to learn in the proper way, I had to go back after a certain point, back to the basics and kind of start over. And the whole process took longer than it had to because I didn't just take the time to study in the beginning. Now, of course, I do offer a trading course, jasoncaspertrading.com. Check it out. There's a discount in the description of the video. There's a lot of people this course has really, really, really helped them, totally changed the way they trade. But you don't have to take my course, guys. You can take any course as long as it's teaching you technical analysis. Okay, this is very important. Take the time to actually learn what you're doing. Step number 2 is don't give up. And I know this is super cliche, but this is a very important rule because for me, in the beginning, trading was a love-hate relationship. I would take the time and I would backtest and I would study and I would get really excited and I would find myself continuing to lose money or breaking even and not finding the success that I wanted. This is a marathon and not a sprint, guys. As soon as you give up, you have automatically removed any chance you have of trading successfully. And we all know why we're in this trading game, right? We're in this to make money. We're in this so that we can have freedom. We are in this so that we can not have to deal with a boss, so that we can not have to deal with employees, so that we can not have to deal with people. It's just us and a laptop anywhere in the world with an internet connection. This is what we can do for a living. This is why we're in this game, guys, right? We're in this to have a more sustainable lifestyle. And as soon as you give up and as soon as you throw in the towel, you're forfeiting all your chances from ever attaining that goal that you have. It might take a long time, okay? It might be years, but keep pressing on toward that goal. And I guarantee if you have the passion, if you have the discipline, you will be able to do this. Don't give up. The third rule, guys, start small. Start small. If you can grow a $100 account by 1,000%, then you could grow a $100,000 account by 1,000%. Okay? If you're successful with a small amount of money, you'll be successful with a large amount of money. And one of the mistakes I see people making, especially in the cryptocurrency space, which is what I'm primarily a part of, is people have this large sum of money, maybe like 50K, 100K, 500K, and they just want to jump right in, right? They've been studying charts maybe like a few weeks, a month or so. They got into crypto in the bull market. They won a few trades. Now they're trying to go gun-ho with like 100 grand. Don't. If you do that, you are gambling. And trading is not gambling, guys. Trading is a science. It is a technique of analyzing a chart and stacking the probabilities in your favor. If you're starting with a lot of money, you will probably lose a lot of money. If you're starting with a little money, you'll probably lose a little money. Or you'll realize that you do have the hang of this and you can grow your small account, which will then, over time, as you develop the skill and you're growing your small account, you can continue to fund your account and then you can make bigger and bigger gains. And then eventually you'll get to the point where either through compounding your own account or funding your account from an outside funding source, you're at the point where you can make a substantial amount of money doing trading, right? Start small. Don't blow your capital because you're in a rush to make money. Remember, this is a marathon and not a sprint. The fourth rule, and this is extremely important, you need to create a winning strategy. You need to have a strategy that you stick to, that you use all the time. You can have multiple strategies, okay? You could have 5 that you use in different market conditions. You need to have a plan. This is extremely important, guys. For every single trade that you take, it's vital that you have a strategy that you are following, that you have a plan that you are executing. If you do not have a strategy and you're entering into a trade based on gut feeling, based on emotion, based on the price moving very quickly in one way or another, you are guaranteed to lose money. You need to have a strategy that you have back tested, that you know is profitable, and then you need to stick to that strategy. Here's a great example. Okay, I have a strategy. Where I am. Okay, these are trade setups I posted in my private Discord. Okay, on Sunday, there were potential Ethereum trade setups that I was looking for. Okay, I was analyzing the chart. I was saying if one of these 4 things happen, I will take the trade. So I had a plan, and I had a strategy. My plan was if Ethereum comes down to get a bounce off of the golden pocket, and we're forming bullish divergences on market Cipher, I will take the long. My stop loss will be below the last swing low. My first take profit will be at the daily level, and then these will be my take profits along the way up. What this does is this gives me very clear things to look for before entering a trade. I'm not moved by emotion because I'm waiting for something very specific to happen. When it does happen, I enter the trade. We hit 1 take profit. We hit another take profit. Okay, I've already had a plan. I already had a strategy. Well, let's go back in time and kind of take a look at the chart of what happened as we came down to hit this golden pocket. What was happening? Well, we can see that as we were coming down, in fact, we could see it better on smaller time frames, guys. But as the price is coming down to our exact entry point, momentum is coming up. So my strategy is, guys, really, my strategy is I wait for price to come to a level of support. I look for the bullish divergences on market Cipher, and that's where I entered the long, and that's exactly what we got right here. And so I entered the long. I was sticking to a strategy, and I wasn't just flopping and groping all over the place. And it's very important that you have a strategy that you can back test, okay? Here's another trade entry for Ethereum. In fact, where was that really good trade that we took for Ethereum a few days ago? A few days ago, there was an Ethereum trade that was just so good. Right here. Oh yeah, this was the Ethereum trade that I took. This one right here, this short. Why did I short this? Because we came up to a it's kind of hard to see on the 1 hour time frame, but we came up to a level of resistance right up here. We got a massive bearish divergence on market Cipher, the most massive one you could possibly ever see, and boom, we came right down. It wasn't because I was entering a trade willy-nilly. I had a very clear strategy. I was waiting for things to happen. I've back-tested this strategy, and this is what I'm doing as I'm entering a trade. I have a clear plan. I have a clear strategy that I'm sticking to. If you don't have those things, I guarantee you're going to lose money. You're going to rely on your emotions. You need to back-test this strategy. Okay? How do we back-test a trading strategy? What we do to backtest a strategy is we go back in time and we look at every instance where these things have happened. Okay, let's say for me, my strategy is price has to come to a level of support and resistance with a divergence on market Cipher. That's the overall gist of my trading strategy. Okay, there's a lot more details. I have more strategies than just that. But what we do is we go back in time and we look every time this happened. Did we get a move? Did we get a move? Right here, we have a divergence on the 3 hour time frame. We can see price coming up, making higher highs. We see momentum making lower highs. We see money flow curving down. What happens there? Well, boom, massive short. Okay, that's a winning trade. And you're going to go back in time and you're going to look at every instance that this happened. That's how you're going to create a winning strategy. Very important. Very important. Okay? And then once you have it, you need to stick to that strategy. You cannot deviate from it. If you have taken the time to go create a strategy, to look at a chart, to backtest this strategy, and you know it's a winning strategy, you need to stick to it. Don't deviate from it. Don't let emotion take over. Execute like a robot. And that leads me to my next point, which is keep a trading journal in the beginning. In the beginning, keep a trading journal of every trade you enter. Keep track of why you entered that trade. Was it a win? Was it a loss? Keep track of your mindset during that trade. Did you FOMO in and that's why you lost? Did you break your rules and that's why you lost? Did you not stick to your strategy and that's why you lost? Keep track of these things. Keep track of these things in your trading journal. It will help you self-analyze why you made certain mistakes. I can say that for most of my losses, my bad losses in the past, I know exactly why I lost. I know exactly what I did wrong. I know exactly where I messed up. And if I write that down, you will not do that again, right? You will learn. You will learn not to do that again. Which leads me to the next point. Don't break your rules, okay? You're going to have specific rules for trading, which might be don't trade in the grocery store on my cell phone, right? That's a rule for me, which I kind of break these days. But in the beginning, before you have a real handle on the market, you need to have very strict rules, okay? You're not going to trade on the toilet. You're not going to trade in the supermarket. You're not going to trade when you're hanging out with your kids from your phone. You're going to sit down in front of a computer. You're going to do clear technical analysis. You're only going to enter a trade if it fits your strategy, if it fits your plan, and you need to stick to those rules. Most people get wrecked because they break their own rules. You need to have rules for trading for yourself, and you need to stick to them. If you are having loss after loss, and you know why you're having loss after loss, is because you're not sticking to your rules, you need to take some time. You need to maybe scale back a little. Remember, start small, and only enter those really good trade setups that are according to your strategy, according to your rules, and I guarantee you will start to see success. Now, the seventh rule for successful trading, in my experience, guys, is locking in profits. Locking in profits is very, very important. The number one rule for making money trading is do not lose money. If we can minimize our losses as much as possible, then our gains will naturally outweigh our losses, and we will become profitable over time. What do I mean by locking in profits? Well, here's what I mean, and let me show you based on trades I've actually taken in the past, okay? So, for example, yesterday, I shorted right here. Let's see. I shorted right here. It was a nice short. Why did I short right there? This was a trade that I posted in the Discord right here yesterday. It was just, I woke up and I saw the most beautiful thing in the world, which was I saw a bearish divergence right into the golden Fibonacci pocket. Boom. Entered the short. Awesome trade. Awesome trade. And what I noticed was we were coming down, we're dropping down from one golden pocket, and we're heading right toward another golden pocket, okay? And I said, hey, if you're in the trade, make sure to lock it in a win. And I said, I'm going to take profit one here in case we retrace a bit. So what does that mean? It means this. You're going to enter your trade, and you're going to have your stop loss in place. And hopefully you know about risk management, how to do a stop loss. If you don't, check out jasoncaspertrading.com because we go through it. Stop losses, risk management, how to find the good entries, how to make sure you're not losing money. Locking in profit is part of risk management, but there's a lot more to it than that. How to use leverage, how to use margin, all these things. What you're going to do is you're going to enter your trade. Your stop loss usually goes above that last swing high. And what I like to do is I like to find areas of support and resistance on the way down if I'm shorting. So just as an example, we can go to the left of our chart and kind of see that this general area here, maybe right around here, was a level of support, right? Where price has found a sticking point. Right here, right here. And so I'm saying, okay, I'm shorting this. I feel like we'll probably reach a sticking point right around here. So what I like to do is I like to take 30% of my trade out right here. 30% of the trade comes out right here. Meaning if I had $100 on the trade, I will take $33 off that trade now, so that I'm locking in 30% of my profit. And then what you'll do is you will move your stop loss to the entry point. What this does is this ensures 100% now, even if price comes back up and you get stopped out, it ensures that you have more money in your trading account than when you started. Okay, more money in your trading account than when you started. This is very important. And then maybe take profit 2 down here. And then you take another 30% out. Now you have 60% of your trade locked in a win. And what happens? Well, you know, you could either move your stop loss to the first take profit here or keep it at the entry. Either way, you're guaranteed to have more money in your account than when you started. And eventually, if you kept the short open, you would have gotten stopped out in profit. You're locking in the profit, okay? Now, when we came down to this area, you know, what I did here was I took my fib retracement tool and I noticed something. Okay, not only did we reject off of a golden pocket, right? We got the rejection off of this Fibonacci golden pocket right here, but then we come down and we're hitting right into the golden pocket down here on the way down as the retracement. So I'm like, okay, I'm gonna enter a long right here. So I did. I actually entered a long trade right here. This was a trade I posted in the Discord as well as a potential trade setup in the Bitcoin trade setups. Again, the way you can access this Discord, guys, is by going to patreon.com/Jason Casper. But right here, okay, we're finding 618 support. The only way I would long this is if we start printing higher highs as the 12 to 24 minutes start printing bottoms, something like this. Okay, which is exactly what happened. We started printing a bottom on the 12-24 minute. We started printing higher highs right here. You entered the trade. And where was that trade entered from? Probably somewhere, sorry guys, somewhere right in here. And so it was a pretty nice long setup as well. I probably entered somewhere in here. And you know, we set our take profits back up to the top. Now, what happened is I had my stop loss below the last swing low. I hit my take profit 1 somewhere up in here, okay? And what I did was I took 30% out of the trade and I moved my stop loss to the entry point, right? What happened? Well, I got stopped out of the trade, but I got stopped out of the trade in profit. So instead of taking a win and then taking a loss, I took a win and then a win. And it was a small win, right? But who cares? A win is a win. And if you can avoid losing money, then you avoid losing money. And if I had just had no stop loss, you could see I would have hit my final take profit up here, right? I would have won the trade. But you can't see into the future. And so by assuring that you're not going to lose, you're assuring that you're going to win. Right? By assuring that you're not going to lose, you're assuring that you are going to win. By not losing money, you are actually making money, because our capital is the only means by which we have to make money trading. It's very important for people to understand that. If you have $100, right? Let's say you have $100. If you lose 50% of that, now you only have $50, okay? Some people will blow 50% of their account in one trade. If you have $100 and you lose 50% of that, okay, $100 minus 50% equals $50. Now, if you gain, let's say you had a really bad trade, you lost 50% of your account, and you're like, you know what, I'm going to make it back. So you do a really good trade, and you earn back 50%. Well, guess what? You only now have $75. If you don't learn how to lock in your profits, if you don't learn how to be satisfied with the small wins and not get greedy, okay? People get greedy. They get greedy. They say, I want the price to keep going up, and they don't put a stop loss, or they lower their stop loss, and they don't lock in profits because they're like, instead of taking 30% out of my trade here, I'd rather take 100% out of my trade at a higher level. That's how people are going to lose money. Once you start losing money, it's an uphill battle. You start losing money, a little here, a little there, then now it becomes harder and harder to make that money back. But on the other side of that coin, if you can lock in your profits and you're constantly gaining money, what's going to happen is your account's going to grow. And as your account grows, you will be able to put more and more money on trades. And as you're able to put more and more money on trades, you'll be able to make more money per trade. And it becomes a very easy snowball effect to grow your capital and make money doing this over time. And of course, we can talk about risk management for a very long time. It's one of the most important things about trading, and we'll get into that later. But before we do, don't overtrade. This is rule number 8, very important. Don't overtrade. Here we go, guys. Bitcoin pumping, Bitcoin pumping. This is what we want to see. This is what we want to see. I want Bitcoin to pump. I want to short from a higher level. I want to take out this high right here and short from about, let's see. I want to short from the, I want to take a short from this 786 level. See, this is my plan. This is my plan right here, my strategy, my plan. One of my plans, if Bitcoin pumps, is to short from here and short it back down. You know, that's what I want. That's what I want. So, let's see. What was I talking about? Don't overtrade. Wait for those good trade setups and only take those. Some people are scalpers, and that's fine. I'm personally not a scalper. I might take a few trades per week, okay? I might take 3, 4, maybe on a really good week, I'll take like 10 trades. But on average, I'm only looking for those really good trade setups, the ones where all the confirmations are pointing to the same thing, where everything is showing us that the trade is going to work itself out. For example, I mean, this trade right here. This trade right here was just the most perfect trade setup. We had a massive bearish divergence on the 1 hour. Not only was it a bearish divergence on the 1 hour, but we were also hang on. I know that we were in some kind of golden pocket. Yeah, I think we were in this thing. Yeah, right. We came right up into the golden pocket, the Fibonacci golden pocket. Oh, this is not the sorry guys, that's not the trade that I'm looking at here. Let's see. I know that there was one. I think it was this. It was this swing high right here that I pulled it from. Perhaps it was this swing high. I forget the exact reason, but this short right here was such a good move. There was so much probability that we were going to come down here. We see momentum coming down as price is going up. We see money flow coming down. We see the VWAP coming down as price is going up on the 1 hour time frame. On the lower time frames, like the 12-minute, I mean, look at this. It's just crazy. We see momentum coming down, money flow, literally money pouring out of Bitcoin as the price is continuing to go up. We know we have to come down from here. These are the kind of trade setups you want to wait for. You don't want to wait for something random where, you know, you see all of a sudden, you know, we're losing a support, so you're going to short it. You know, you want to wait for those high probability good trade setups. A lot of people feel like they always want to be in a trade. And I feel that most people lose most of their money because they always want to be in a trade. It feels so good to win a trade. And it gives you that high, and you want that high again. You want that dopamine rush again. So you're looking for the next place to win a trade. You feel like a boss. I've been there so many times. I remember this one day just recently. I was trading all day. I was in the Discord. I was posting my setups. I felt like a boss because I posted like 7 winning trades in a row. Just in one day. We kept shorting off this one resistance and then longing the support. It was nice. A few months ago. And I got cocky, and I got in that mindset where I'm like, I'm just going to take the riskiest trade setups because I'm on such a roll. I got wrecked. And fortunately and thankfully, because I have good risk management, I didn't really get wrecked, guys. But I lost a trade. I lost a trade because it wasn't a good trade setup. And in hindsight, I realized I was over trading. Don't overtrade. Only look for those perfect trade setups where you have all your confirmations, where you're sticking to your winning strategy that you've already backtested, where you're sticking to your rules, where you're locking in your profits. And guys, the final rule to become a successful trader is risk management. Risk management. What does this involve? It involves never risking more than 1 to 5% of your total trading account per trade. And I recommend 1%, only risking 1%. Including leverage, guys, including leverage. What does this mean? What does this mean? It means that you are finding trade setups and you're using your stop loss so that every trade you take, the most amount of your total account you will lose is 1%. If you can risk very little and gain very much and lock in profits, you will be successful over time. Let me show you what I mean by that. Okay. Let me show you what I mean by that. Because this is very important, guys. This is probably one of the most important things to trading. If you have a trade set up where you can maybe enter a trade, let me turn on some levels of support and resistance right here. Okay, this trade right here, as an example, we shorted the daily level. This is going to get into technical analysis and stuff, okay? This is just, if you're new to this is exposure to the idea, but this will give you a spark of hope and excitement about what's possible. We were looking for a short from this level. Okay, we had it marked out as a level. We got our confirmations. Money flow coming down, momentum coming down, price coming up. And now what we can do, because we're expecting us to come down from this pivot point, is we can enter a short. As we're losing the daily, we can set our stop loss above the resistance, above the last swing high. Very important. If you don't know what a swing high is, you need to know. If you want to know that, check out jasoncaspertrading.com, right? Comprehensive trading course, give you the knowledge and the skills you need to become a confident, profitable trader, focusing on the indicator market Cipher. What I can do is I can enter a trade and only risk 0.3%. I am risking literally 0.3%. I could have $1 million in my trading account. I could have $100 in my trading account. $100 in my trading account. And I'm only risking 30 cents if the trade goes bad. But my potential gain for this trade is almost 7%. That means I'm potentially going to win 21 times more money than I'm risking. These are the kind of trade setups that we want to take. If you can find trade setups like this because you have your technical analysis down very well, you can put 100% of your account on this trade and even use 3x leverage. If I have $100, I could use leverage and put $300 on this trade and still only risk 1% of my trading account, right? Because if I'm risking 33 cents and I'm 3x leveraging my whole account, if I lose, if I get stopped out, that's only $1 that I'm losing, 99 cents that I'm losing. But if I win the trade, okay, that's 7% on $300. So let's just pull out our calculator right here. Sorry for all the sloppiness here, but if I have $100 in my account and I can get a trade set up like this, okay, where I'm only risking 1% of my account and my stop loss is in a smart place, right? Again, this might be a little advanced for certain people. You need to focus on finding good entries where you can have a tight stop loss while still being a good stop loss. It's very important that you understand it has to be a tight and a good stop loss. A tight stop loss a lot of times is not a good stop loss unless you have a very clearly defined reference point from which to trade off of, like this level of resistance right here. If you have $100 in your account, okay, you can 3x leverage it, only be risking 1%, and right now you have the potential to make 7% on the trade, which is $21. So now you just made $21. That's 21%. You just made 21% in one trade. Okay, that's a lot of money. That's a lot of money to make in one trade, right? 21%. That's a lot of money to make. Now, let's say that next trade setup comes along, and you can also use just as tight of a stop loss, right? Just as tight of a stop loss. Let's say now that this trade comes along. Okay, this trade right here, again, 0.3% stop loss. Now, let's say this second trade comes along, and again, it's a winning trade, right? We've locked in our profit. We took profit 1 right here. We took profit 2 right here. Let's say that we make, even though it's a 3% move, we're not making 3% on our whole position. We're making 3% on only half the position because we took half out right here. So let's say, the second trade, we're, again, 3x leveraging times 3. And let's say it was a 1.5% move, okay? So $363, 0.15% move. Now we just made another $5. Is that correct? Yeah, we made another $5, give or take. No, you know what? We would have made more than $5. I'm sorry, guys. We have $121 times 3. Let's just say, for all intents and purposes, this was a 3% move when all things factored together, taking out part of the position. Let's say it was a 3% move. So on that trade, we make another $10. So now we have, $131 in our total trading account after 2 trades. We grow our account 31% in 2 trades. Okay. Now let's say we lose. We lose now 7 trades in a row. We lose 7 trades in a row. If we lose 7 trades in a row, the first trade, we lose $1.30. Okay? And if we lose 7 trades in a row, how much are we going to lose? Maybe like $10? Maybe like $10 we'll lose? Because we had that good risk management where we had those good entries where we're only risking 1% of our total account. We could win 2 trades and then lose 7 trades and still be net in profit because we were following good risk management. And that's key. Finding the good setups, locking in the profit, making sure that you're winning more than you're losing. It's very important, and it's very possible to do if you just have a little TA. But over time, these wins are going to add up. It's going to grow your account by a lot. And you can see how easily within a few trades, okay, maybe within a few weeks, you could easily, even following this strict risk management, conservative type of strategy where you're risking very little of your account and you're only taking the best trade setups. I could say that you could easily double your account within 2 weeks. Easily. You could double your account in 2 weeks. But you have to be disciplined and you have to stick to this, right? You can't get greedy. You can't get overexcited. You can't overtrade. You can't break your rules. You have to stick to the strategy. You have to lock in the profit. And I guarantee, guys, if you follow these principles, you will be successful. You will. Especially if you have the desire to do this. All right, y'all. God bless all of you. And make sure if this is the kind of content you like, subscribe to the channel. I oftentimes post technical analysis updates, live streams, live analysis, and yeah, this is a cool place. So God bless. Pray you are all well. And I'll see you on there. One more thing, guys. The website has been updated since that video, and as you can see right here, it's purple instead of blue. And we also have, if you go to learn.jasoncaspertrading.com, we have an order flow course as well now that will go over how to use Exocharts, how to use Coinalyze, and things like that to take advantage of more of this data. But with that being said, I just want to thank everybody for watching. Make sure to subscribe to the channel. God bless everybody. In the name of Jesus the Messiah, and I will see everybody in the next video. Peace.